Welcome back to our channel. Today, we're diving into a book that has transformed countless mindsets, 7 assets that are better and safer than cash. Number 1. Federal bonds. The U.S. Treasury and Federal Reserve would be more than happy to take your funds and issue you securities in return, and a very safe one at that. A U.S. government bond still qualifies in most textbooks as a risk-free security. Unfortunately, many individuals and institutions already know that and have entered the bond market ahead of you, which has bid bond rates to very low levels in this time of crisis. If the low rates don't deter you, government bonds are one of the safest places to keep cash. Number 2. Real estate. In disquieting times for the banks and the stock market, the allure of real estate investment can be strong. Become a landlord. Put down some of your principal on a property, fix it up a bit, rent it out, and have your tenants pay off the mortgage. Or, if you're interested in a shorter-term opportunity and have more experience, maybe try flipping houses. On the other hand, sellers who really need to sell may be willing to settle for lower prices. And relocations due to people who started working from home, leaving cramped, expensive center city housing have helped suburban and exurban regions in some parts of the country while lowering values in some cities. Number 3. Precious metals. One doomsday scenario in which financial markets cease to function holds that gold, silver, and other metals such as platinum or copper will continue to retain their value, if not appreciate. The likelihood of having to return to a barter system with physical goods is minimal. Precious metals have historically provided a low or negative correlation to other asset classes like stocks and bonds, which is to say, when those investments go south, metals are unlikely to follow at least very far, and may even increase in value. Number 4. Luxury assets. This category of tangible assets encompasses fine art, cars, watches, diamonds, and other jewels, and just about anything that qualifies as a collectible. In their favor, they're objects that can be touched and seen, compared to a bank account statement that could take time to collect on if the financial institution that housed it ceases to exist. That said, Luke's investments are hardly a sure bet. While data on their historical returns are elusive, they are generally thought to have lagged stock market returns, while having periods of rapid appreciation due to either strong financial market performance or periods of popularity, which increases underlying demand and resulting prices. Number 5. Cash hidden away. Although stuffing money under your mattress has become a cliche, it unquestionably keeps your funds close at hand, if not necessarily secure. You could, of course, also hide your assets in a safe deposit box or safe. Again, this method probably qualifies only for a doomsday scenario or for times of a short-term liquidity crunch. Even then, keep only a small stash, not least because inflation steadily erodes the value of currency over time. In a deflation, the opposite is true, of course. Number 6. In a business, perhaps a farm, buying a business can ensure a return on your investment, provided of course that the enterprise generates a profit. In very bad times, of course, businesses suffer as well. A farm can be a particularly tangible business, if not a reliably profitable one. Investment farm. You hire staff to handle the actual agricultural operations. Owning farmland is a good fit with a survivalist mindset, too, since the land can produce food on the off chance of a global calamity or meltdown of the global financial system. Number 7. Cryptocurrency. Cryptocurrencies are another alternative investment option. There are a number of choices. Bitcoin is just the best known. So-called cryptos offer individual investors a unique opportunity to get into what is still very much an emerging technology. Of course, this is also a high-risk, high-reward opportunity. For example, after soaring to stratospheric highs, Bitcoin lost about 3/4 of its value in 2018. You shouldn't invest much or any funds in cryptocurrency that you'll rely on for your future. Yet most analysts believe these alternative currencies are here to stay, and brave investors may want to pitch a stake on the off chance of hitting it big with one of them. Thanks for watching this video.